What is the Bitcoin halving? Why does it matter? And why might this time truly be different? I know the four most dangerous words in all investing. This time is different, but it could be. In fact, I've got some charts to show you that in a way, this time really is different, certainly from some perspectives. So let's talk about it. Before we get into that, just a reminder, if you do appreciate this kind of content, whack on that thumbs up button, subscribe to the channel if you're not already, and let's get into it. So, in case you're new around here, just need a refresher, what is a Bitcoin halving? Well, Bitcoin halving refers to a pre-programmed event in the Bitcoin protocol that occurs approximately every 4 years or after 210,000 blocks of a mine. Reminder, a block gets mined about every 10 minutes. During a halving event, the miner's reward for mining new blocks is reduced by half. Each time, every 10 minutes, when the Bitcoin miners find a new block and put all the transactions inside of that and then mine it, they get the transaction fees plus the set block reward, which is currently at 6.5. So that's going to get cut in half pretty soon. The halving is an important part of the Bitcoin protocol, and since the code is open source, anyone is able to see it. Of course, now this means that there are fewer new Bitcoins that are going to be in circulation after the next Bitcoin halving. Now, why does a Bitcoin halving occur? So the halving is an important aspect of Bitcoin's overall tokenomics, which is designed to control the supply of Bitcoin over time with the goal of creating a scarce and valuable digital asset. The total supply of Bitcoins is capped at 21 million. There will never be more than 21 million Bitcoin. And the halving process ensures that this limit is approached at a predictable rate over time. Bitcoin halvings promote stability over time by helping to ensure a more stable and predictable market. If the supply of new Bitcoins were to continue at a high rate indefinitely, it could lead to hyperinflation, which is obviously something you don't want and part of the reason why Bitcoin was created. The slow release of new Bitcoins through the halving also promotes a more equitable distribution of the currency. By limiting the supply of new coins, Bitcoin halvings ensure that early adopters do not have an unfair advantage over new entrants. Now take a look at this chart here. The next Bitcoin halving is coming April next year. When that happens, the block rewards get cut in half. It's going to go down to 3.125 from the current 6.25, not 6.5, I said a moment ago, 6.25. So that means the total daily supply of newly created Bitcoin drops from 900 down to 450. The inflation rate currently for Bitcoin is 1.8%. That's going to go down to 0.9% April next year. One day comes, the 210,000th block hits, and it gets cut in half. It's all programmatic. It's all programmed. Nothing can stop it from happening. It is inevitable. That's just 2024. 2028, we have the next Bitcoin halving, where the daily amount of Bitcoin produced drops from 450 down to 225, the inflation rate down to 0.45% from 0.9%. Then if you fast forward to 2032, when the next Bitcoin halving after that is, things start to get super interesting because the block reward is only going to be 0.75 BTC per block. If you can get one Bitcoin, you're going to have more Bitcoin than it gets created each single block. That's pretty impressive by 2032, of course. That means 112 new Bitcoin coming in per day, or an annual inflation rate of 0.22%. Very, very, very low inflation, considering, of course, what fiat currencies are doing. My only question for you is, have you got some Bitcoin? Because these numbers are pretty damn crazy, and you have to consider demand's going up. All these things are happening that are mega bullish long-term for Bitcoin, and the total amount of newly created supply just keeps dropping. There's only a total of a few million more coins, like 2.5 million more coins that will ever be created. It's pretty crazy. Actually, less than that. It's nuts. It's nuts when you think about it. Now, the Bitcoin halving, of course, it's all great, but we do have to keep in mind that the Bitcoin halving itself may not be enough anymore. We do need to see the money supply going. New bull runs are brought about by new money coming into the market. And while people like to get very excited, the truth is, once the Bitcoin halving happens, it doesn't mean instant overnight mega moon time. We need time for the market to work this out and to actually absorb that new reality. Last market cycle, it took about 8 months before we saw Bitcoin cross over the previous all-time high and start putting in new highs. The cycle before that, it took even longer. So keep this in mind. Now, before we get into the implications of a Bitcoin halving, just a reminder, if you are a cryptocurrency investor, you've got to get yourself signed up to the Wealth Mastery Investor Report. This is my weekly newsletter. We send it to your inbox 3 times per week, and it is just jam-packed full of amazing value. Every single issue, we cover the crypto markets, the news, altcoin alpha. We talk about airdrops, DeFi tutorials, NFTs, and much, much more. Join our 75,000 weekly readers by signing up using the link down below, and it's free, so check it out. Okay. This chart right here, this represents the cycles for Bitcoin. These green areas are the price markup times post-halving, right? So post-halving, we tend to see a bit of lack of price action, let's say. Not too much exciting happens over the months just after the Bitcoin halving, but then there's a big markup period where that new reality of reduced supply with increasing demand is met. The red zones here mark the bear markets. That's when we have massive price markdowns, often between 80 and 90%. Brutal market realities of investing in this asset class. But you don't get the 10,000 or 3,000% gains or the 700% gains without the 75% corrections. That's how it works. That's the game. Now, if you look back to the Bitcoin halving in July 2016, that was followed by a near 3,000% price gain from $600 all the way up to almost $20,000. If we look back to the 2020 Bitcoin halving, we saw the price go from approximately $8,000 up to about $69,000 by the end of the market cycle. 725% gains being put in there. Currently, we are in the yellow zone for Bitcoin. The yellow zone back in, whether we talk about 2015, 2016, whether we talk about 2019 into early 2020, this is the accumulation zone before the Bitcoin halving. This is the time when the smart money is positioning itself, getting ready for the next market cycle. That's where we are right now for Bitcoin. There could be volatility to the downside still. That's definitely a part of the equation during an accumulation period. You have to be ready for that. But the risk reward right now for buying Bitcoin is massive. Yeah, you might look at a 50% drawdown as just, let's say, the maximum risk profile as an example. So you might buy a Bitcoin today and it's going to be worth half of what you bought it for in a few months' time because some crazy stuff happens in the global economy. But the upside potential, if you don't sell when the price goes down and hold on to it, is that during the next cycle, you might be looking at 500, 600, 700% gains. So if we take the idea of diminishing returns into play here, we could see the next market cycle topping out at something like, for example, $180,000 for Bitcoin, or $150,000, for example. I think $150,000 is a pretty reasonable price target, and that probably gives you about 500% gains if you were to buy at the current price. Dollar cost averaging in, as I have been doing. It's a strategy that works pretty well for these kind of market conditions. During an accumulation period, you can accumulate on a weekly basis. And then, of course, there'll be another bear period that'll come in after that, but that's generally how we've seen these market cycles work. So we'll see an accumulation period lasting for Bitcoin up until the Bitcoin halving, which is in April of next year, followed likely, of course, depending on if there's not some new great global depression, hopefully not, then it'll be followed, most likely, by the price markup period. Now, how long that takes to play out, does it take a few months? Does it take a year? Remains to be seen. But as we've seen in previous cycles, that's when the big price markup comes, and we will see 400, 500, 600% gains for Bitcoin. Hopefully. Now, why is this time different? Why do I say this time is different, guys? Well, this time is, to an extent, different because of this right here. So this is the 1 year hodl wave for Bitcoin. We can see right now 68.75% of the supply has not moved in over a year. People are holding on to their Bitcoin at the current prices. They are not interested in selling. That's a new all-time high, by the way. A new all-time high. Now, we did have a pretty good holding rate, for example, at the bottom of the last bear market is around 58%, so we're around 10% higher right now. A lot more long-term believers in the asset class at the moment, but still, that is noteworthy. Here's an interesting one. Addresses with more than one Bitcoin. New all-time high right now. During a bearish market period, 1,019,295 addresses have one Bitcoin or more. Very impressive numbers right here. Now that compares to, for example, previous market cycles where we actually saw big sell-offs and huge declines in the supply. For example, back in 2018, we dropped down from 730,000 down to 695,000 addresses. Or we can look at back in 2016, we dropped from 520,000 addresses down to 450,000 addresses. But now it's actually been up only since really the hardcore sell-off started in 2022. We have actually gone from about 825,000 addresses to over a million. We've added about 200,000 new addresses holding one Bitcoin or more during this entire bear market. That is different compared to previous cycles. And of course, previous cycles, we didn't have freaking BlackRock, dudes. BlackRock, come on. It's BlackRock. BlackRock, of course, trying to get a Bitcoin ETF. When that happens, the estimates are that could bring in $20 to $30 billion of new capital. That buys approximately half of all Bitcoin currently sitting on exchanges and has massive implications for the price of the asset class. That could actually see us break previous cycles and potentially reach a new peak price before the Bitcoin halving. You see, previously, we've never seen a new high price for Bitcoin post-peak before the Bitcoin halving. Will this time be different in that regard? Well, if a Bitcoin ETF gets filed, if it gets actually start trading on the market, if there's not a new Great Depression, yeah, there is the potential. There is a potential for that. But I think that's probably something that could rally us more like to 48K. Still no new high before the Bitcoin halving. But we'll see. We shall see how it plays out, of course. But that is definitely something that is this time is different. In no previous market cycles have we had freaking BlackRock trying to get a Bitcoin ETF. Now, there's people like the Gemini twins, Tyler and Cameron Winklevoss. Those guys have been trying to get a Bitcoin ETF since, like, I don't know, 2013 or something like that. BlackRock is probably going to get the Bitcoin ETF. There's been a lot of things happening from the Grayscale victory to just a general sort of reality that BlackRock's in the game now, and BlackRock doesn't get told no. They've won 575 ETF applications, only ever lost one. Makes the chances of BlackRock getting approved for a Bitcoin ETF incredibly high. And then there's this. This is probably the most shocking chart that I can show you in all of crypto, because this is the Bitcoin percent balance on exchanges. You see, we are living in a fascinating area. We are living in the post-peak Bitcoin era, and it's only going to get worse because miners are only going to have less to sell, and that number of holders keeps rising. Remember, we added 200,000 new addresses holding one Bitcoin or more. If we were to boil that down to addresses holding 0.01, just a couple $100 a Bitcoin or more, we're talking millions and millions of people here that have bought Bitcoin during this bear market cycle. Now, back in the COVID crash, that was when we had peak Bitcoin supply on exchanges. We had about 18% of all Bitcoin on exchanges. Ever since that time, we have seen a dramatic decline over the last few years. It declined through the bull market. It's declined dramatically more during the bear market, and it's continuing to decline all the time, meaning we are facing a situation that when the Bitcoin halving comes and miners reduce their emissions by 50% every day, meaning that miners will have 50% less to sell every single day. We're already at a situation where we're reaching like 5-year lows of Bitcoin on exchanges. It's only going to get worse because miners aren't going to be sending Bitcoin to exchanges to sell it because they don't have it. Demand continues to rise from regular retail traders just like you and me, and BlackRock's coming. That's why this time is different. To the extent that it is different, we still see market cycles playing out. We're still in an accumulation period. There's always new factors that make things a little bit different, but history does, in a way, still kind of repeat. Thank you very much for watching this video, and I'll see you next time.